Greetings to everyone. My name is Muniru Haruna, a PhD research scholar at the Faculty of Business and Accountancy, Lincoln University College, Malaysia. Thank you very much for giving me the opportunity to present my little research work on the topic an analysis of the impact of dividend policy and asset structure on firms' value among selected banks listed in the Nigerian capital market. The research paper writing contents includes the following. Number 1, background of the study. Number 2, statement of research problems. Number 3, objective of the study. Number 4, research hypothesis. Number 5, theoretical and analytical framework. Number 6, literature review. Number 7, research method and design. Number 8, discussion and conclusion. Number 9, summary of key findings, recommendations, as well as references. Background of the study. Generally, financial scholars used to make two classifications when discussing on the subject matter of dividend policy and its impact on the value of a firm. On one side, certain scholars believe that there is no relationship between dividend and a firm's value. This is referring to the irrelevance theory. While on the other hand, researchers claim that there is a correlation between dividends and a firm's value. This is referring to the relevance theory of dividend policy. Among a number of scholars that made the proposition that dividend policy is unrelated to firm's value, Modigliani and Miller in 1958 and 1961 proved convincingly the relevance of dividend policy to firms' valuation within an impeccable capital market without the existence of taxation in their own analysis. Even after they established a theoretical foundation for dividend irrelevance, Modigliani and Miller in 1966 further gathered that dividends at the same time serve as an income to the shareholders, which give them an indication to show that there may be some degree of relationship between dividends and market price. A key gap identified in this study is that of inconsistency in the valuation of listed companies in Nigeria. If, for instance, a company has a market price of 200 Naira per share today and an asset per share of 300 Naira, and tomorrow the market price risen to 450 Naira per share because of a mere speculations, then something appeared to be misguiding in the entire process of share valuation. Statement of research problems. A number of scholars gathered that indirect change in dividends convey a considerable amount of information that at least about management expectations of long-run future profits. This research tried to evaluate whether the proposition that firms are not properly valued in Nigeria because dividend is not considered as one of the key drivers of valuation is valid or not. The answer to the question of whether corporate dividend policy has significant impact on the firm's value and asset structure still remain unclear in Nigeria. These issues are the basis of this study, or which the study have investigated. Objective of the study. The primary objective of this research is to evaluate the analysis of the impact of dividend policy and asset structure on firms' value among selected commercial banks in Nigeria. The following are the study's specific objectives: to establish whether dividend policy has significant influence on firms' value in Nigeria, to find out whether asset structure has significant influence on firms' value in Nigeria. Hypothesis of the study. Specifically, the study have tested the following hypotheses. Hypothesis number 1, there is no significant correlation between dividend policy and firms' intrinsic value among the listed companies in the Nigerian capital market. Number 2, that the company's asset structure does not significantly affect intrinsic value in the Nigerian capital market. Theoretical and analytical framework. Two essential propositions that forms the basis of this study have been extracted from the publications of Modigliani and Miller theorem, 1958, 1961, and 1963, as follows. Number 1, irrelevance theory. Nobel laureates in 1961, that is Merton Miller and Franco Modigliani, Miller M&M, developed irrelevance theory, which they proposed more than 50 years on, and this remained one of the most respected in the canon of financial literature, according to Baker in 2009. They argue that under the ideal circumstances of a perfect capital market, rational investor behavior, and perfect certainty, the dividend payment is unrelated to a firm's value. On the other hand, the residual theory of dividend policy of Miller and Modigliani in 1961 holds that the firms will only pay dividend from residual earnings. That is, dividend should be paid only if funds remain after the optimum level of capital expenditure is incurred. That is, all suitable investment opportunities have been financed and exhausted. With the residual dividend policy, the primary focus of a firm is on investment, and hence dividend policy is a passive decision variable. Literature review. Modigliani and Miller argue that the sum of the present value per share after the payment of dividends equals the current value per share before the dividend payments. Stated differently, the prevailing market price of the share at the beginning of a period can be defined as the present value of the dividend that is paid during the period, plus the present value of the market price of the share at the end of the period. This is in accordance with Baker et al. 2007, Oliver et al. 2016 in their empirical study. The empirical results in their analysis revealed that dividend per share have an inverse relationship with the share price in the Nigerian stock market. This result is in agreement with the empirical analysis done by so many scholars in the field of finance supporting the irrelevance dividend theory. The value of a firm is a direct function of its investment decision, thus making dividend policy irrelevant, also in accordance with Miller and Modigliani in 1961. Research method and design. The research context. This is a quantitative research design. Research participants. These are the listed banks in the Nigerian Stock Exchange. Instrument for data collection, annual reports and financial statement of selected Nigerian banks. Sampling technique, a simple random sample. Source of data, secondary data from the annual reports and financial statement of sample banks. Research variables, dividend policy, intrinsic value and asset structure, method of data analysis, the use of dividend performance measuring to perform an analysis of the comparability index between dividend policy, intrinsic value, and asset structure. Discussions and conclusion. This research had investigated empirically the impact of dividend policy and that of price to book value on the stock price of banks listed on the Nigerian Stock Exchange. The result for the descriptive statistic and comparability index are presented below. Table 1 is on comparability index of market value and dividend per share margin ratio. 5 banks were selected in the name of Access Bank PLC, FBN Holding PLC, Sterling Bank PLC, United Bank for Africa PLC, Zenith Bank PLC, over a period of 5 years, 2005 to 2015 to 2019. The table analyzed in the following: comparability index of market value and dividend per share margin ratio analyzed. Table 1 above compare the average percentage of dividend yields of the 5 selected banks in Nigeria over the research period of 5 years, that's 2015 to 2019, under review. A review of the comparison shows that Access Bank PLC had an average of 8.31%, FBN Holding PLC had 122.90%, Sterling Bank PLC had 1.73%, United Bank for Africa PLC had 14.14%, and Zenith Bank PLC had 160.23%. The average for the 5 banks over the period of 5 years equals 32.05%, which is over and above the industry average. This signifies that consistency in dividend declaration significantly affects the intrinsic value of banks in Nigeria. We will therefore reject the null hypothesis and accept the fact that dividend policy significantly affects the firm's value in the Nigerian Stock Exchange. Therefore, furthermore, the maximum percentage of dividend yield for the 5 selected banks over the period of 5 years shows that Access Bank PLC had a maximum of 11.44%, FBN Holding PLC had maximum of 314.47%, Sterling Bank PLC had maximum of 5.29%, United Bank for Africa PLC had maximum of 20.76%, and Zenith Bank PLC had maximum of 347.21%. With this, all the 5 selected banks had on average exceeded the minimum industry average of 5%, representing 100% of the total of the selected banks in Nigeria. Discussion and conclusion continued. Table 2 comparability index of market value and book value per share. Also, based on the 5 banks selected, this table is comparing the book value and the asset structure of the 5 selected banks. The table compares the average percentage of price to book value of the 5 selected banks in Nigeria over the research period of 5 years, that's 2015 to 2019 under review. A review of the comparison shows that Access Bank PLC had an average of 222.57%, FBN Holding PLC had 144.66%, Sterling Bank PLC had 260.21%, United Bank for Africa PLC had 206.21%, and Zenith Bank PLC had 116.69%. The average for the 5 banks over the period of 5 years equals 190.07%. This signifies that consistency in book value significantly affects the intrinsic value of the banks in Nigeria. Further, the maximum percentage of book value of the 5 selected banks over the period of 5 years shows that Access Bank PLC had a maximum of 300.23%, FBN Holding PLC had maximum of 230.42%, Sterling Bank PLC had maximum of 239.59%, United Bank for Africa PLC had maximum of 342.21%, and the Zenith Bank PLC had maximum of 138.15%. With this, we therefore decided to reject the null hypothesis and accept the fact that consistency or increase in book value of companies significantly affects the market share of selected banks in Nigeria. Summary of key findings. As discussed under Table 1 and 2 above, the study indicates that dividend policy and price to book value has a positive and significant association to stock price of banks listed in the Nigerian Stock Exchange. The inference for the result is that a number of investors, both value and growth, can use either of dividend policy or price to book value to appraise stock and possible future price increases. Therefore, the study concluded that the combination of dividend yield and price to book value have important effect in predicting stock price due to the positive nature of their combined and individual relationship. The study further find out that consistent payment of dividend will ultimately have significant influence on the performance of banks in the current security market, and that the structure and value of assets also influence the share value of companies in Nigeria. Recommendations. The following are some of the recommendations offered by the study. Number 1, that the potential investors in stock and share of banks in Nigeria need to engage the service of investment analysts when making a decision to buy shares. This will aid investors in making a good investment decisions. Furthermore, in deciding on whether to use dividend policy or price to book value, investors need to determine their primary objective as to whether maximization of profit or optimization of shareholders' wealth is their target or not. The study also recommends further research that will include more banks, data, and possibility of carrying out this study on all the listed companies in the Nigerian Stock Exchange in order to expand the scope and increase the reliability of its generalization to the entire population. Thank you very much for listening. These are some of our research references. Would like to use this opportunity to say thank you very much for giving us the opportunity to present this our little research work. Thank you once again and goodbye.